You are listening to Tax Able with Natasha Heron.
I know tax is not seen as the most exciting subject. Many find it scary or simply switch off. We feel what we do not understand, so my aim is to empower you in tax, not to send you to sleep. The first season is called Back to Basics, and I will take you through the essentials using real-life examples. All I ask from you is 15 minutes of your time each week. Hello and welcome to Tax Able. Today's episode is called Go Green for Greta Thunberg. And that's because we're going to be discussing the tax benefits associated with electric vehicles. There is a big push towards opting for a greener life. Veganuary to reduce meat consumption, sugar tax, the growing popularity of non-dairy milks, and swapping fossil fuels for electric-powered travel. You're probably aware that the government wants us to switch to electric vehicles. What you may not know is that there are some great tax incentives to entice you to switch. The items we'll discuss today are business cars and vans, tax benefits and charges of either options, and we're specifically going to be looking at benefits in kind, VAT, and capital allowances, and any other benefits available for fully electric vehicles. So let's first look at benefit in kind, and I call these BICs. Each year, employees and directors have to report and pay tax on certain benefits. The key distinction here is if you are self-employed, you cannot be the employee and also the employer. So this section is not applicable to you, but it may apply to your staff, if you have any. A BIC is a non-cash benefit provided by your employer, but as it has a monetary value, is treated as taxable income. Typically, BICs relate to company cars, private medical insurance, loans, or accommodation. And by this, I do not mean overnight hotel stays for business trips, rather flats or houses provided for longer periods of time. You're taxed through PAYE, and this means that tax is taken out of your salary by your employer, and report all your BICs through a form called a P11D. You do not pay national insurance, instead your employer will pay this on your behalf. Today we're going to look at company cars and vans in detail. The two types of vehicles are treated very differently, so buckle in as it is a tad complicated. So cars. In the past, cars were seen as a great benefit, but over time the government is squeezing every penny possible. You will have gathered by now that a car will trigger a benefit in kind, but how do we calculate the tax? Well, it depends on the car's CO2 emissions and its list price. The rates range from 1% to 37%. Let's first look at an example. We've got a Volkswagen Golf. The CO2 emissions are 124 grams per kilometre. And you're not expected to know this. You can find the rates online by searching a registration plate, or it's listed on the manufacturer's website. The BIC rate for this type of car is 29%. And if the list price is $25,000, you would take the $25,000 and times it by 29% to give you $7,250. This is the amount that you're going to be taxed on. And your rate of tax is dependent on your level of income. So you'll be taxed at either 20%, 40% or 45% of that $7,250. And remember, this is taxed on you personally through your salary. Now let's compare this with the fully electric version. So if we use our example from earlier, we've got the Volkswagen Golf. The electric version, the CO2 emissions are 0 grams per kilometre. The BIC rate for 21-22 tax year is 1% of the list price. And as you can see, 1% is preferable to 29% compared to the petrol version. Please do be aware though that the BIC rate for electric cars is set to go from 1% to 2% from the next tax year, and that rate will stay at 2% until 2025. Now, a call out to my employers. Be careful if you are buying a new electric car. The first registration must be to your company. If it's pre-registered, and by this it can even be a forecourt or a demo model, it's classed as a second-hand car, and the tax benefits are not so great, so do not miss out on a technicality. Some people are worried about fully electric cars, and specifically their mileage range, so many manufacturers offer hybrids. Well, the rates for hybrids are different depending on their electric mileage range. So if we use our example from earlier, the hybrid version has an electric mileage range of 39 miles. The BIC rate is then 12% of the list price. 12% is better than 29% for the petrol version, but still a lot higher than the 1% for the electric version. Hybrids have lower rates, but there's still a hefty amount to be taxed on, and this will reduce the amount of salary you receive. That's cars covered. Let's look at vans. And what is a van? Well, there is an official HMRC classification, and they say it's a vehicle primarily constructed for the conveyance of goods, and it has a gross vehicle weight, fully laden, not exceeding 3,500 kilograms. This definition covers panel vans with 2 or 3 abreast seating, chassis cabs fitted out with conversions, 2-seat commercial SUVs, and pickup trucks. The easiest thing to do here is to double check the van's V5C registration document for its European classification. If it says N1 or N2, it's probably a van. If it reads M1 or M2, then it's going to be taxed as a car, and that means that you fall into the emission-based rates we discussed earlier. BICs on vans are simpler than cars as it's dependent on how the van is used by the business. If it's solely used for work purposes, no BIC. This also includes insignificant private use. And by this I mean it can include small trips such as making a detour to the shops for a coffee on your way to work, or visiting the dentist during business hours. HMRC does not view these trips as triggering a BIC, compared to cars, which automatically trigger BICs, as they are often used for journeys other than your commute to work. Once you get into the realms of using your van for beyond work and insignificant private use, then BICs kick in and you have to cough up. The rate is $3,600 for the coming tax year, and it's a flat rate. The flat rate is the same for all vans and pickups, regardless of their size. But if your van is fully electric, no BIC at all. So that's BICs covered. But how are you going to finance the purchase? There are 3 ways to buy a vehicle. You can buy it outright, under hire purchase, or lease it through an operating lease. Now, if you buy it outright or via hire purchase, at the end of a hire purchase, you usually own it at the end, and you have to pay something called a balloon payment. And because you own it at the end, it's treated the same for tax as if you bought it outright. So we'll look at these 2 options first, and then we'll later go on to the operating lease. In your accounts, the car or van will be shown as an asset in your balance sheet as you own it. For VAT for cars, the VAT is not reclaimable on any type of new or used car, even electric cars, as it's specifically blocked, unless your business activity is one of a car dealership or a taxi firm, so the car would be shown as a stock item instead. For vans, the VAT is reclaimable, as they're a commercial vehicle, and you use it in your business. To reclaim the VAT on a used van, the invoice must specifically list the amount of VAT, as some dealers use a special VAT scheme, so keep an eye out for this. As you own the assets, you are eligible to claim capital allowances. And if you do not know what I mean about capital allowances, make sure that you tune in and listen to Buy the Whole Kit and Caboodle episode, as we look at these in detail. Now for cars, if the CO2 emissions are 0 grams per kilometre, the full cost is deductible. If the grams per kilometre are 1 to 50, then it goes in the main pool and you only receive a deduction of 18% per annum. And if they're a high emission car, and by this we mean over 50 grams per kilometre, they go in the special rate pool and you receive 6% deduction per annum. But what about capital allowances on vans? Well, the full cost is eligible for deduction, and if it is a new or unused van, it is also maybe eligible for the super deduction, which means you get an extra 30%, so keep an eye out for this. Now let's circle back to operating leases. And under an operating lease, you do not own the vehicle, as you're essentially just renting it. And you may have something included called a monthly maintenance pack. In your accounts, as you do not own the vehicle, the monthly rental costs are treated as a deductible expense. For cars, the VAT, you can reclaim 50% of the VAT charged on the monthly payments and up to 100% of the monthly maintenance amount. For VAT on vans, there is no limitation when it comes to reclaiming VAT on the monthly payments. You can reclaim 100% of the initial rental, monthly rentals, and even maintenance charges. As you do not own the vehicle, you're not eligible for capital allowances, so we do not need to cover this at all. Some other items for you to consider are, if your employer pays for fuel and you use the vehicle for personal journeys, you'll have to pay tax on this separately, and this will also be reported in your P11D. For my employers, to encourage the use of electric and hybrid vehicles, there is an exemption available for workplace charging. The exemption covers the cost of the electricity, providing the facility, and any connected services. But do be aware that the exemption does not cover the reimbursement of an employee's personal expenditure away from the company premises. So you can't include an expense claim if the vehicle is charged at home or at a service station. Other incentives include free parking in certain areas for electric vehicles and no congestion charge. If you do own your own company and you're looking to buy a fully electric car, then personally you'll pay minimal tax because the benefit in kind is 1% or 2% of the list price. The company will buy the vehicle rather than you purchasing it from your taxed income, and then the company will receive a full tax write-off through capital allowances. So if you are thinking of making a switch or buying a new car, this is definitely something for you to consider. Now we've come to the end of today's episode, and the points you should take away from today are: fully electric cars have the highest tax incentives. Vans are considered business assets and do not have many rules surrounding their use and the recovery of payments. And lastly, please make sure you consider the implications of how you're going to fund your purchase. Now, if you've enjoyed today's episode, please make sure you click subscribe to listen to the episodes as they're released.
You are listening to Tax Able with Natasha Heron.
This podcast has been produced by Redwood Studios and sponsored by Hillier Hopkins LLP.